What do you do after 2 days like this?
Heck of a move. Market certainly has some breathing room, I think, to maybe 41.15, maybe 41.50 in terms of when the next big levels come into play. But let's take a step back. It's so tempting to want to go back to the old leaders, to go back to the top of the market, the techs, the Apples, the Amazon. I think that would be the mistake here. When we look at what are the stocks that are acting demonstrably different or demonstrably better than where they were earlier this year, it's industrials, it's financials, it's still energy, it's some healthcare. You get these big, ripping, mean reverting moves in the techs and the growth here. I think chasing those is a mistake. I think adding to energy, industrials, financials as they come in here makes sense.
Why is that a mistake? Yeah. It would seem logical that if you do think inflation is coming down and the Fed is going to do less, which is what the market is telling us this rally is all about, wouldn't you want to buy the ones most beaten down by higher interest rates?
I think when you look at the top of the market, let's say the top 5 stocks, at one point were 25% of the S&P, right? That's roughly similar to what the top 5 were back in 1999. That top 5 weight in 99 ultimately bottomed at 5% of the index 7 years later. I think this process,
in other words, more to go.
I think this process, this secular process away from the top of the market back to the average stock is one that's going to be measured in years, not in months or quarters. And when we look at some of the, what I would call garbage that's kind of rallying off the low, the Carvanas, the stuff that's down 90+%.
The shorted stocks.
Right? The highly shorted names. Some of those things are up 30 or 40% this week and are still down 80 or 90 on the year.
Right.
It reminds me so much of how the real stocks in the market had to disassociate themselves from the beaten down .com stocks of the 2001-2002 period. You had to disassociate yourself from the stuff that I think is permanently broken, the lower quality, the ARC stuff, the IPOs, et cetera.
You think that's permanently not a good investment?
I think for the minimum of the next cycle, we're not going to go back to that stuff as leadership. There has to be a period of purgatory or apathy or just neglect for that part of the market. I don't think we've seen that yet.
So you like the value or cyclical stocks? Cyclical stocks, though, going into a potential recession here where the Fed is still raising interest rates into an inverted yield curve?
Yeah, and this is kind of what we wrote this morning. We're trying to marry in a very maybe nuanced way, respect for the tape here, because there's certainly momentum behind us, with respect for the cycle. And I think, Sarah, as you mentioned, 3-month 10-year is inverted right now, as it's been the entire cycle. I think negative 35 or negative 37 basis points this morning. So we know what's on the other side of that typically. You can get good rallies with inverted curves. We had it in, let's call it 2007, when stuff like industrials actually led. I also think the 01 experience with industrials is interesting. That was a anything but tech market. And industrials were leadership even into and through the 01 recession.
So you like industrials better than energy? Do you think energy still leads this market?
I think energy is our secular leader. Now, I'm not so naive to think that in a recession energy would be immune. But what do leaders do? Secular leaders, when they correct, they're not immune, but they come back faster. Think about this summer. Energy got hit hard this summer. I think at one point XLE was down maybe 25, but it came back faster. That's how leaders behave. And I'm just still struck by the fact, if you look at the flows in energy, they're really not that extreme. And if you look at energy's weight, it's still only 5% of the S&P. The long-term means 11. We're in a reversion through the mean business. I suspect kind of over the course of the secular here, energy is going to command a much larger weight in the index than it presently does.